Jeremy Harper here. It's 18th of February 2025, and the RBA just made their February announcement with a 0.25 cash rate cut on the official cash rate for the country. So 4.1% is the now official cash rate, which was in line with a lot of expectations. The RBA does seem to be happy with the way inflation is moderating, though they are quite cautious of the fact around further policy easing. So a key takeaway that I can see here is that, yes, there's a cut that's come through today, but don't expect too many further cuts in the near term, particularly when they look out the outlook for the global uncertainty. And they made notes around what's particularly happened in the United States with their recent uptick in inflation over in the US. So they'll keep an eye on that, particularly with the Fed saying they may pause around that cutting cycle. So great welcome news for Australian households and small businesses and medium-sized businesses that are carrying some debt. We see that 0.25 cash cut. So what does that mean for you as a mortgage holder? So on a variable mortgage, that will be passed on per your lender's discretion. So we've already noted that as of now at 3 p.m, CBA, NAB and Westpac have announced the market they're going to pass on the full 25 points. You just have to note that each bank will be cutting or updating their reference rate, which is their variable cash or their internal cash rate. They'll charge customers less than discount per their timeline. So I know CBA is going to put forward that first reduction of 25 points a little bit earlier than some of the other banks. So just keep a note out for that. Check their socials. Also, you may receive direct email or mail out from your bank. So what does that mean in terms of mortgage holders? So if we've got a $650,000 owner-occupied mortgage, let's say you're on a lower end rate, 5.89, you'll be paying currently at a P&I monthly repayment about $3,800. So that will, with a 25-point cut, it's going to reflect about $100 saving per month on your mortgage. So not insignificant. And for many households out there, their mortgages may be higher than that. So that means a greater cut that's coming through to you. So keep an eye out for that. What I'd recommend is if your bank hasn't passed on the full 25 points, certainly get in contact with them or chat with your mortgage broker around how you can get them to come to the table, or even look at what other options are out in the market. But now's the time to review those finances. And then finally, what does that mean in terms of borrowing capacity? This will have a increased borrowing capacity across the board for borrowers. So if people are looking to get in their first home, or if people have existing debt and looking to take on future borrowings, you're going to see probably an uplift of about 5% borrowing capacity depending on your circumstances. So what does that do to the property market? We'll soon find out. But my guess is if there's a few cuts, that's going to increase people's ability to borrow, and that may be reflected in property prices into the future. So look out for any further updates. Thanks, guys.